Good morning. I'm just trying to quickly give this update on trades that we've done so far and to see uh, the possibility and what likely the trade is going to do. After this correction that we had of this bearish move, and this was the first move, then we had the first correction, which is A, and the B, and we are doing the C leg. Now, in as much as we know that this is a regular flat correction, the way we actually, any serious trader will just know that when we are doing things like this, price is not that perfect. So price is not that perfect. So you don't want to think that exactly at that point, price would reverse. Price may just go a little beyond it. The most appropriate things to do actually is try to see what price action that you will have at those levels at 4 hour. 4 hour price action should be enough to confirm what is going to eventually happen. And that's how to engage it. So, and for instance, I don't know if you really understand what I'm trying to say. But like we add this correction here, which is A, and this move to the upside, it's exactly at 90, which is A is 90 to B, B is 90 to A. So we expect that C is going to run between 61.8, 100, or 123. Even if it's going to be 100 or 123, it does not mean that price may not breach that 100 or 123. So I'm just saying that in case we are coming down here to finish with 5. But so far, in the middle here, the only thing that is apparent is that it seems as if this wave is burning out. You can see after this bullish, monthly bullish candle, then the next monthly candle seems that this thing is burning out. So if it's going to burn out, what are we going to see at the end of the day? What are we going to see? And that is what we must be ready to look at. Now, if you see the actions here or reactions here after this bearish move, 1, 2, 3, 4 months. It took 4 months to eradicate the number of pips that have been gathered here before the movement, occurred. So it can take like as much as 4 months, you can see. And this movement from here to here, let me see how many pips. From here to here is just about 500 pips, which is big. It's also is big, but it took that before they began another trend properly. So the move went up like this, and before we had this correction, which is the first correction, the second correction, and it seems we are seeing the third leg. But again, we have to have at the back of our mind that this is a correction, this is a correction, and this, of course, supposed to be a correction, which is 335 correction that is expected. Then again, in as much as it looks so much like that, we have to begin to tell ourselves, what if we get here and it's not what we think? Will the price still trade this one, even though it looks strongly as the last leg of C? Would it be treated like that, or would it be a beginning of another trend? So, but the most probable, it's like, okay, C, and it's going to end there, and we're going to have a run up with upwards. That is most probable. But you must have at the back of the mind what of the 5% chance of this, going beyond what we thought it would. And but again, is the proper price action that you see on the 4 hourly that would tell us is eventually this is what where the price has now at least decided to back off and go back up. Now, like I told us, I said at those levels, like the retracement here, an extension of this is where 61, the first blue, is where 61.8 is. And you saw that price breached it a bit down before this upward movement and before they began this movement. So I had expected that that also might happen, at this level, that we might have a breach, and it has appeared as, okay, we have a breach. We have a breach. Now, seeing this breach, one thing I want to do now is to try to, I want to do something here. We want to see, if you see some levels of wick at this bottom here, I want to drag this and see if that will be respected or not. So I want to see if that will be respected or not. I'm using this green area now. I want to see if that level will be respected or not. I want it to touch that level. Okay, I think we are on that level really. Yes, I think we are probably on that level. So now we want to see if we're going to breach this red line, which is the support, before eventually we move to finish the correction. Now, so when you're looking at the monthly candle, you think the correction had not started, but the internal correction has really started, but the end of it is what we are waiting for, and that's the leg you want to, buy. But now from this level, now where the price are touched, which coincide with what I saw on the green area, so this proposed level of final trend change is how many pips now? That's about it's about just about 360 pips. About 360 pips, which means we are almost getting there. Now, the question is that will the price continue to go down straight and to touch this area? We don't expect that to happen. We don't expect that to happen because we've not had major fall. Because if that should happen, it means something has changed. So there's still like 95% chance of us, the price, that is what is expected to go up for us to have a major fall and now do the last leg and run it down. Just like when we had, here's a major two, and when we had internal structure of, 3 here or 4 here, you can see what happened at this level. When the price came to this area in the internal structure of 3, then we had this bullish move, and it's a correction down up before we now, push the price down. So this is the first move from here to here, which is A. If you connect from here to here is A, down to here, which is B, and down to here, which is C, before this move began. So we are going to have something that will look like that also eventually, maybe on the weekly time frame. It might not be apparent on the monthly time frame. But looking at the price action that we have here, when you see this and this one appearing, it means that the bears, the dollar is burning out. That's what we can read with this, that the bears are burning out. Now, when we look at this on the weekly time frame, what do we have? Just fix the attention on the weekly time frame. So when you look at it on the weekly time frame, so you can see what we are getting now on the weekly time frame. Okay, let me do something again so that it will look like what you are familiar with. So on the weekly time frame, this is what we get. You see, we're already having like the first move, which is this one looks like an A, and this one is looking like a B. So on weekly time frame, it has not actually touched the red, so you can see. So we are expecting that a C leg up to finish that correction, and if we break this top, if it's going to come, but then are they ready to move? That is what question we are asking ourselves. Are they ready to move? But this is the first move, which is like looks like an A correction to me, and this is B that is going, and we expect B to terminate around this area. And let me see if I can now zoom to see that level of the, yeah. So the green is still touching here. If you look at what we have here, let me zoom. Now you see it's still touching it. So even here it has touched here, but not the current point, which is almost there. So, and that is around 3372. That's on the weekly candle. Now, let's look at the daily, because the price action here, is such that price may still go a bit down, before they move up. That's on the weekly. So if you look at it on the daily, what price action do we have? Now, on the daily now, there's a price action that we are getting. This. And honestly, when you see this might mean that it's an early stages of trying to finish the correction. So, like I said the other time, that we saw the leg, the A leg, this one to this place. Okay, it's here, not this one. This is international of 3. This is where we said the A leg. So we said this might be the A leg from here to here, might be the A leg, and this might be the C leg. I mean, sorry, the B leg. And if it's going to be the B leg, you know that the B leg can run 123. It can run 123. It can run, if it's a zigzag, can run, but it's more than a zigzag anyway. It has done more than 100. Is it at 123 or more? And if it's an expanded flat, then the B leg may actually run the B leg a bit more than 123, but it won't get to it shouldn't get beyond 1618, and it's 161.8. It shouldn't be more than that. That is what we should expect. And anything more than that, it's like it's a lost place, something has changed. That is what we should expect. And after we have the B leg, then we can say, okay, we can now have the C leg. Now, it's tricky though, because there was no, when they had finished the internal structure in the lower time frame, we felt like they might just push hard from here and up, and they could have gone up here. But see what they did. They pushed the price so much down, to finish up this. And this might just be an early sign, early indication on the daily that they want to reverse. But let's look at all these points of reversal or correction. See, after the double formed, they moved up. Now, after this move, and they formed this, they moved up to start correction and finish up correction. So we need to see how this one will close on Sunday, because this is going to close on Sunday. So we need to be watching this every day now. You need to be watching this every day. You need to be watching this every day. And price may close above here, and price may still come back to use this bottom here as in fact, we should not expect, if price is going to move up from here, we shouldn't really expect price to come back to this level again. Price may use where it closed to spring up, or price may come back a bit down. So it's very tricky. but price may also still run a bit below it. Why do I say that? Let me show you this again for you to see. Now see, if price is going to respect this area as a support, price may still, run a bit back. They might just give us volatility, because thinking that most of you will think this is the end of it and they want to change, and they will run it down. Even they can go and push price below 3359, then to get people out before they make the move. But then what we can do now is to say, okay, where is this thing at 161.8? We are just taking everything so seriously now. I don't need this anymore. I don't need this anymore. So if A starts from here and B ends there, so we want to see where C is going to be. I mean, C of the internal structure, not the C of the major big correction. So let's do that. From here, it is 0 to 100, it is here. So for me, I think price is already at 1.618. Price should not do more than this rate. Otherwise, something else is happening. So even if anybody wants to get off this trade, the last place price, you don't want price is to reach 0.3348. And our stop loss is at 0.30000. So we don't want price to breach this place, but I have this feeling that price may want to shock us. So we must be ready. So even if we are knocked off, the direction of the trade is still up. That's what I'm trying to say. But we need to be checking the daily candle. Every daily candle is, is very important now. So if this one goes and close, would another, there's nothing stopping another candle from going up, and the price may still want to go down. It's very, very possible for price to want to go down. Let's look at the 4-hour candle. Now, after they did this and they moved price this way, see what price did. And price just came back down and, broke the low a little. So we need to see what exactly will be happening, every day now till Wednesday. Because if they intend going up from here, they're going to push up, break this structure here, because this is a structure now. You can see this is a support level now. So once they break this structure and we have a 1-hour candle on top of this support here, then we can confirm that they want to go up. But the first order is to break this support. This support has to be breaking. So let's begin to look at those on the daily. The important level that has to be broken before we can begin to tell ourselves that, okay, I think they're going to make it up. Now, this is not important as this. This level is very important here. You can see it's a daily, this is a daily candle formation. This is a daily support. So it's a very important level to be broken. So 1.04729, it's a level that has to be broken. So if that is broken before Wednesday, then we can tell ourselves that we are going up now. We are ready to go up. And how many pips? And that is from what price has done recently. That's just about 50 pips or 55 pips. So we need to go beyond 55 pips to break this level to say we have completed 335. So we need to break this level. And the next level that has to be broken, which is the daily candle, is this also. So we need to break this two level and move a bit up here, and this is where we should expect at this level of daily support is where we should expect price to say I'm done. That's where we should expect price to say I'm done, to now go bearish again and start with 5. So it's a bit tricky here, and when whatever you are seeing, don't give to emotion. Just know that price may shock us to breach if price should break this, and if 1 hour candle, or sorry, 4 hour candle should close below here, then something else is happening. So I don't expect price, 4 hour candle may cross it, just like they crossed. This is the 100%, whatever, 4 hour candle didn't close below it. Here is the 400, and also this daily candle didn't close below it, rather. So I think we are at a good point that we should just keep our finger crossed and say, let's just begin to see what is going to begin to play out from here. If it goes up as a correction, it's not too good. If Monday morning begins to go up as a correction, so we are going to find a level to get out. So if it goes up as a correction and touch this area as a correction, and I want to get out of the trade. But again, if it goes up as a correction and break this as a correction, but if 1 hour candle, 4 hour candle should sit on top of this level, then we should still keep it and begin to move our stop loss. That's all we can do. That's all we can do. So, but we need to reach this level and move up. In case we are knocked off, then we have to be checking for every 4 hour price action to sell, because if we are knocked off, then they might just spike it at a goal and begin to move rapidly. Before you think you want to enter, it might be difficult. This is the silly thing that they do so that you are not in the trade with them. So you now start second guessing what is the direction of the movement. But we know that 4 should correct, and let's see how this goes. So the next 2 days is probably crucial for us. Sunday and Monday is crucial. So that's what we see. Now, if we now take it back to the 4 hourly candle, that's the 4 hourly candle. So the 4 hourly candle, the way this is, you can see it didn't give a proper price action, but this price action can still be taken as a bullish move. When you see this, a rejection, after this happened, a rejection. So what we'll see how it's going to play out. So we need to see movement from here to here. This has to be broken. This has to give way. So remember this level, please. 1.04700 or 730 is the level that price has to breach. Very important level for price to breach. If price is able to breach that, then it's good. I've told you this is just the movement from here to here. It's A, and to here is B, which is at 161. And if this happens, at least we should see a movement to the upside at least of 123, extension of these two to get to C, and before we then begin to move down. So that is all I can say. Let's look at it on the 1 hourly candle and see what is happening. Yeah, it still looks like it's correcting. It still looks like it's correcting. So this is the first move that we saw, and this was like a big move. Okay, this was like a big move. But you even see this as a big move, that this is A. If you consider this as A, and this is as B, but we need to see how long this really is going to go. And if you're going to now consider the next move as a C, if it's correcting. Or if you see this one movement as A, and this is a B, and that this one is going as a C, and that the price is going to go further down. Let's look at that possibility. I don't know if you get my point. Let me do something for you to understand what I'm trying to say. Now, this is where we want to We don't want price to breach before they move to the upside. Now, assuming that we have not even finished the trend, and that when we had this movement, the first movement against is, assuming this one is A, and this one is B, and we are going to do C leg before we move down. Let's assume that. So what relation of price to this one, what has it done? Let's see if it's going to work in terms of fee. So from here, if this is A to this place. So this is actually at about 111, 111. So which does not really agree that this makes any sense in terms of correction. Except we want to say, okay, let's say it's 100. If there's anything like that, is there anywhere that B is 100? There is no place where B is 100 really. B is not 100 in any place. B can only be anything between 50%, if it's a zigzag, or 61.8, or 76, or 85.4. That is what B can be in terms of zigzag. And this does not qualify to be a B wave. Can it be a regular flat? It does not qualify to be a regular flat because it's more than a 90, and a 90 actually should be here, where this line is. So it's more than a 90, so it does not qualify as regular flat. Then could it be expanded flat or running flat? B should have gone more than, there's nowhere where you see B as 100. So somehow it doesn't look like, oh, this is A and this is B. Sorry for that break in transmission. So this one does not look like B, even though it came down more or less in a 3 correction, fashion. Like this is 1, 2, 3 on the 1 hourly. It came like that. This one went up on like a 5-wave movement up. It's a 5-wave movement up really. But this one came down in a 3-wave pattern. So what we can expect, though, is like in a correction format. If this one is now A, and this one is now going up as B, then we should now expect another leg as C. So that leg as C, if it's going to be an expansion, then it might break this low again. So this leg is very important for us. So it's better for us to take this one as A. It's better for us to take this one as A. If we take this one as A, just follow me, please. If you take that one as A, and that the next one is going to be B, which it may just play out like that. So these are possibilities. So nobody is really ever sure. We can only begin to read what the price is doing. And that's why you need to watch this video over and over to know the point we need to make a decision. So this is the level we said we don't want to break. Let me begin to use black for those points that I want us to note. And you will need this video to watch it over and over and over and over and over and over to grab. I will still try to get them where I want them to be. This black line, don't just worry. I'm just trying to clone before I move. Okay, so now let me begin to move now. So the first one, I want it here, which is where A is now. So we are saying after the initial move like this, which is a 5-wave move, and this is A now, so which means we are going to start from the end of the first move, which is there. So that's the origin of A down to here. So we want to see where B wave is going to get to. So we are hoping that this B wave is going to probably touch here or break it. And if anything happens here, all we have to do is to now tell ourselves, this is where we expect a C wave to be before now they begin to now move ferociously upward. So I don't think that this movement up will start anything. I don't think so. I don't think that this movement will start anything to the upside. You just have to bear with the silly network. Okay, so now if this one is the beginning of the move, you know, and we're going to have a correction. So the movement here tells me that price will not just do that because it broke the low here. Then will it break the low again? Maybe not. If it's not going to break the low again, it now depends on how far this one can go up. But I don't think that this price moving up, it's the beginning of the movement. I still need a leg down before we say, okay, now we have confirmed that we are now going up once that leg finishes. So let's begin to see possibilities of what corrections we might be having. That's how to look at it, please. You must understand this. Now, if A starts from here and end here, so where can we have B? So B, this is 61. 61 is here. 76 is here. 85 is here. Price had moved beyond 85. And 90 is here at this level. You know, let me use this one to tell you so that you understand what I'm trying to say, because you might not be able to see this 1 hour time frame. This is 85. Price had broken 85. You know, this is the gimmicks. They did as if they are going to form a what do we call it now? On the smaller time frame, evening star. So if this one had closed, anybody would have thought, oh, they are moving down. See, and all they are now trying to do in the middle is to do a correction on the 1 hour time frame in the middle to push the price. So these are the silly things that they do, even if you want to do 1 hour time frame. But now, see, this is 90. Price had broken 90, but because the price had not closed properly above 90, here we might still say, okay, can this be a 90? But we will now need 100 to be taken before we know that once 100 is taken, this 100 is taken from here to here. If it's taken, once it's taken, once even price should get here, then know that price is going to go above it. Then they're not going to have a correction down from there. Now, assuming that this is where they want to stop, and we will now expect a retracement of C at 123, assuming, let's assume, let me use this. This is the first assumption because price had gone beyond 85, so it's not a zigzag. So let's do, that's the first assumption, okay? Now, the other assumption is at 123. This is where 123 is, around this area of that move. That's 123. Another one is, let's say, 161.8. Now, is 161.8 very close to the price I said should be broken before we say we are moving up now. That is what we can have. These are the levels that we are going to concentrate. This is the first level, and this is the second level, and this is the last level. So once price go above here, then we are telling ourselves that this looks most likely we are going further up. So the level that is key at 123 is that's 1.04361. So 1.04361 is very key. If we get there, if we breach, and if we now get to this point, it's an extra. This one should have just told you that price now is going bullish. Between here and here is now is bullish and it's correcting. Now, what if price does not make it beyond here? So what do we now do? What we're going to do to find an extension of C down. So we want to see the area of extension of C, if it's going to be. So the maximum area of extension of C, if it's going to work as a regular flag, will now look like this. From the point of A, the beginning of A, to the end of A, so where we think C is going to commence, which is going to be here, and we don't want to go beyond 123 if actually we are going to move up. So 123 is going to go below, slightly below this level, if that is going to work out. So just pay attention, and that level will be exactly here, and that will be exactly that place, which is 1.03263, still above our stop loss. Now, if price will not do this but stop at 123, so where do we think price is going to now get to? As C. So C in that case may just be at this 123, which is the first place, down here to the beginning of A. So in that case, if price may just use this red as a support before it springs up. If indeed it's going to be bullish, it should not do more than 100. It shouldn't even kiss 123. But again, if it's going to kiss 123, assuming that's 123 of that move, then it's going to be here at that level. So at that second level of C is 0.3136, still not at our stop loss. Now, if price is going to use it, if price should get here, we have told ourselves between here and here is a bullish move. So C will not do more than 100 from here. If it's going to be like that, C will not do more than 100 because this is a bullish zone for the price. It's a bullish zone for the price. This can still be a bearish zone, but from here to here is a bullish zone for price. So in that case, because it's a bullish zone, if C gets to this point, down to the where A is, has ended, then to the origin of A, and we look at 100. So at 100, it's really a bit below it. So it won't do more than 100 because it's a bullish zone. In that case, we are putting it here, which should be the last place the price can get to. So that in itself also is 1.03081. So which is just like it's less than 8, that's less than 8 pips, you know, of our entry. So I think what happens between these 3 zone levels now will decide where price is going to fall. But do we expect price in these areas? It may get to this area, it may get to this area. But if it worked up, what we are saying is that these are the last areas that we can have price. But if price should get to this point, it will end up being what? A running flat. A running flat can be what? Can be a 61.8 or 100. In that case, it's going to be a 61.8 on 100. So we are telling ourselves that if it's going to be a 61.8 on 100 from here as a running flat, as a running flat, 61.8 or 100, a 61.8 will be here, and a 100 will be exactly at this level. So which means it can break low and get to this point. So price can still break low and get to this point at 61.8. That's what we are saying. If it's going to be a running flat, and if it's going to be an expanded flat, it will get to this low here at this level. But once you get to the bullish zone, then everything is different altogether. So that's why I say that this thing will can still be, because the way it's going, it can get here. And when it gets here, there's a tendency for it to break low again, to come to this point. And when they are breaking low, you'll think that, okay, they are going bearish again and price will now push up. So I need to explain all these scenarios for you because this is a correction and I still expect that this C leg is still coming down. So let's allow it to go. Let's allow it to go up. And these are the areas we should expect a reversal. I don't think the way price is going to break 1.04730 for now. I don't think so. If I'm correct, because I'm saying, because this is a correction, you know, forget this is like a bull or like an engulfing candle, one, forget it. And what they are doing now, forget this one. Price is still pushing higher for now. They're going to push higher. They're almost there. I think this is an area between here and here is where we now see price move back downward for the last leg. So we must pay attention to what the price is doing. These are things that makes it very difficult for anybody to trade and to be guessing what the price. So the price had gone, you know, in this, you know, probably had 40 something. Let me see. Price has like about 54 pips left to get to this area, the maximum area where you're going to work. Once they get here, you know it's a bullish move. Even though they are coming down, it's a bullish move. So I think that settles that for now. So we're going to wait. So don't be surprised if you see that, okay, you are praying that it's going up, and what you are seeing next is that price seems to be going down. So this movement might actually occur between Monday and Tuesday. We might see price move down between Monday and Tuesday. Early Monday, the price may go up, get to this point, and begins to move down. So if the price should break beyond here, then that's a bull. That's, you know, strongly bullish. The price should do that, which I don't expect the price to take this leg up and now begin to do two corrections. Is it possible? It's not impossible to. These are very strange things that can happen. So if you take this one as A, and you now run this one to break up, and you call it B, and you now bring this one as C. Well, I shouldn't expect that anyway, but let's continue to wait. These are ways to engage our head around trades like this, but we're 1.0300 is still a good level that we can have our stop loss. So let's look at other trades. The other trade is just the yen pair that I'm going to really talk on now. Which of the yen pairs should I pick? Just one of it would surface. Let me pick CAD yen. Let's look at 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 CAD yen. So this is CAD yen. And like I told us that the CAD yen, for me, last video I did, this still looks like 3. Okay, this is like a 4. And I said that this one, it looks like the first wave of 5 to the upside. So if this one looks like the first wave of 5 to the upside, and we said we are correcting with this is a weekly candle now. We are correcting with 2 of 5 of 1. So that was what I said. So, and looking at that, the way it's playing out, it's a correction for sure that we are having. And we said that we had this one. After this move, we have this one as an A, a B, and a C. And this leg now is a bullish leg. That's the meaning of that. So in terms of correction, if you take this one as A and a B, let's see what we have here in terms of correction. So if you take this one to the downside as A to this point, okay, and we said this is the correction here, the upward movement here, this is A and this is B. So, and this is at about 85.4, which is like a zigzag. Then you don't expect this one to run down beyond 100 or 123.6. So if you now look at that, they run to the downside. They run to the downside. They run to the downside is this. So to the point of A there, back to this place. So this is exactly at 123. So this one had done 123. So which is correct for that correction. So this move makes it a running flat. This is a running flat. So it did a running flat here to finish wave C. So the wave C has ended. Now we now have the third wave of wave 5. We now have the third wave of wave 5. We have the third wave of wave 5. But in terms of looking at the whole move to this area, where we think that that thing may have started from, this is internal structure of wave 1, 5 of 1, internal structure, which is 1, then 2 of it, 3 of it, 4 of it, and 5 of it. Okay, of that 1 of 5 major. So, and this is now 2 of 5 major. This is 2, complete 2. So if we now look at what kind of retracement do we have in all, it's a bit tricky anyway. So which means that that may not be the level at which we started. Maybe from here. Or a bit, it's a bit maybe a separate look at it. But the most important thing we have to see now, because we have to look at different game pairs, the most important thing we have to see now is that the wave 3 has started here, or 5, so which has gone a bit down. Wave 3 has started, it has gone a bit down. Wave 3 has started, so we should wait for this wave to, we can't just join it. We should wait for this trade to finish its move and give. Just don't mind this silly thing, the way it's going. So we are seeing that this is wave 3 now. So this is 531 that is going up now. So we are let's finish this 531. We are going to have 2 with 532 correcting to the downside. And so once we see A of it, we can target A of it and see the way B is going to go up and the way C leg is going to come down. And we can have a second entry at that to go up. That is how to plan it. So where this one is going to stall is almost stalling, because if you look at it on the 1 hour, if you look at it on the 1 hour, so this one finished there, and we had some corrections there in the middle. You might not be able to see those corrections very well. There are corrections there which I'm going to show you later. But the move actually had started here for internal of 3-1. So 3-1 is going to finish its own as 5 wave, which is 1 and 2 and 3 and 4 and 5 is almost finishing now. So it's going to finish as 5 wave, and it's going to very soon it will be coming down. These are like ending diagonal that you are seeing for this particular last wave, which I think is the last wave. So it's going to come down as wave 2. So my first see the move, the first move, which is A down, A B, and A C, and the price is going to now go up. So we are going to target that entry. On the 15 minutes time frame, if you want to now look at this area, I want to see something. Yeah. I want to show you something after this move. So let's pay attention here. So I want you to pay attention there in the 15 minutes to see the kind of correction that we had in that place. So this is a 15 minutes time frame. So if you look at the correction that we had here, after this first move, the price came down, okay, ending C here, and we have the first move, which is the first correction, which is like, okay, the first attempt of movement is this one, okay, from here that you want to change direction, so you count that as the first move, but not a correction. So this is the first correction, which is A, and this is B, and this is C. That's how to count it. Once the price moves down and makes a move, this is like a price action for upward movement. You can see a triad here. So, and that is your move, the first move, and this is the first correction, and this is B and a C. So if you look at this one, it's like a movement of a regular flat, where sorry, that interruption again. So this one goes up and comes down like an A and a B and a C on the 15-minute time frame before we now add this move. Now, after this A, B, and a C, then we now have this movement going up for the internal movement of what with 3-1. Now, with 3-1 is going to move like that. So with 3-1, the 3-1 is going to move before we have 3-1 major, 3-2 major. Now 3-1 major is going to run in 5 waves. Okay, so the one of it is going to run like this in 5 waves. 1, 2, 1, 1, and this is a 2, and this is a 3, and a 5. So now have a correction of 2 here to now have the 3 wave of it going up also in like a 5 wave format. So it's going to go up like a 5 wave format because this one has gone in like a 1 and a 2 and a 3 and a 3, okay, and a 3 and a 4, and this is a big 4 and a 5, and this one is about ending. So this is where we are now. This is where we are now. So let me check this out also and go back to the lower and the upper 1 hour time frame. So this instant correction, you won't see it on the 1 hour the way it is. So you see, it's very difficult for you to spot the way I just spotted it. It's very difficult because this is the move, and this is the first move, and this is the first correction, A and a B and a C. So it's when you now break it down. So the first end of C here, and the first move is A, B, and a C, and this is the beginning of the new wave to the upside. So we'll see how far this one is going to go. And when you want to catch early, the movement early, one of the things you have to do is to first draw your trend, because that's what you can do really. Otherwise, you miss entry. Missing entry is always a challenge for most of us. So we draw this, and you can set an alert that once price breaks this trend, it means that the price is now correcting. So once that is broken, is correcting, then you're not going to find your leg. You see where it has gotten to here. Find your leg for your A leg of the second wave, and to see how you're going to now go up by B, come back a bit by C. When your A comes down, then if you are sucked in, good for us. If not, by the time B goes up, we'll be able to locate the leg C to come in. So we have 2 attempts to actually come in, you know. We might just do a 61.8 or a 76.4 to see if we are going to be drawn in at first A. If not, we will now look for B, for C leg to go up. Forex is like that. If you don't know anything about it, then you don't know anything about it. So it could be like that. So I think it's pretty much the same with NZD, JPY. It's a bit different on CHF, you know, so it's pretty much the same. Okay, you want to accept alert for, accept those alerts already waiting for. Yeah, so it's pretty much the same with all of them, you know, looking at what they have done, the kind of correction, this is daily correction. So you can see it's pretty much the same. And this one actually from here, you know, and this one format is completely different. This one is like a zigzag. The other one is like a regular flat, a correction and start JPY. But this one gives a zigzag, and you can see the movement. The zigzag there, you know, stall at 50, and that's how all of them are not doing exactly the same thing in terms of correction from this movement from this place down to this place. We didn't do the same thing in terms of correction. Okay, from this tip down to this area. So it's like 50, you can see it's like 50. So that one is a zigzag movement. And let's see the zigzag movement from this top down to this area, down to up to this point here. This one even went past. Can you see? It went past, but it didn't get to, you know, 161.8, you know. And that's why when you are waiting here, that probably price is going to turn up here and finish up this leg. See what they did. You know, they freaked everybody out. That is how devilish they can be at times. You know, deliberately trying to force people out of the market. You know, but in terms of inner structure, it's pretty much the same. So this one is going up, and we're going to probably put the trend here to catch the correction of the second leg of the 3. And all these things are going to break the structure above, really. They're still going to go up and break this structure. Price is going to break this one. That's what I'm saying. So price won't stop. The minimum the price will do is to get to this point to finish with three. But price is going to break above here. That's what I'm saying. It's going to break above here. So we still have a whole lot of movement locked in between here and here. It's a whole lot of movement. That's over close to 800 pips. Price is going to do all of that. Now the next one also is pound yen is almost the same. I think let's see the format that one gave us. Pound yen. Okay, pound yen gave us the same thing. Like, okay, I don't want to pick up this one side. Gave us the same thing like NZD-JPY. So it's almost the same thing, like a zigzag. Yes, a zigzag. Okay, a zigzag. So price is still going to go up and break this, you know. And this is not the beginning of. They are not changing trend yet. You know, don't take this as a change of trend, except price fails to do some things in the middle. So I think it's a zigzag correction, and price is just going up further. It's going to break up. Now USD-JPY is different. USD-JPY is different. Okay, let's see what we have on USD-JPY. Now the USD-JPY is just finishing, you know, its own 5 of 1 here. You know, it's just finishing it. Okay, I said I would be using all these ones that I have marked. Okay, so it's just finishing its own here, and it's starting to correct leg A down. So this may have finished leg A. This may have finished leg A, and you might be doing a B, and you will do a C, and after do a C, also you will correct to break the top. That is what I can see. Has it finished this correction? Yeah, this correction may have ended, from here. This may have ended this. Why do I say may have ended that? If we have A and 2, so maybe 3 somewhere. Let's break it down to 1 hour time frame to see what he has done. This is 1 hour time frame. So this is 1 hour time frame. After this move, 1 of 1, a 2 of 1, and a 3 of 1 here, and a 4 of 1 and a 5 of 1, and we might be seeing a correction. And this correction might just look like a B wave. It might look like a B wave. And so it's behind all of them. So it's behind all of them. That's what I'm saying now. So what we should expect, if this is A wave, is this. This is what we should expect here. We should expect this. And this is where I'm going to end. It's longer than I thought. This is where I'm going to end it. So from here, that we start from here. And to this point. So we should also expect a zigzag, or we should expect a zigzag, or it could be a zigzag, it could be a regular flat, it could be a regular flat. But what it's going to look like really, let's see. For a zigzag, we should expect a move to the downside from here. As a zigzag, it could actually begin to move down from here, which is 50. Then it could go a bit up. So, and I think the best place you can 50. I think it's going to give a zigzag. So in between these areas that we should expect this price to get to. This is 61. So if you want to sell, these are the areas we should expect a sell to be triggered. It's already at 129.421. It may get to 129.861. So once we catch a price action here, then we should, plan to, because this one is what a 5-wave format. This one is going to be a 3-3-wave format. So it may have ended it. If you're looking at this as a 3-3-wave format, I think it may have ended and begin to fall from here. It might be falling from here. It might be falling from here. It might be falling from here. So because this is like, let's see. It's still early to say that it's going to fall from that place. The way price is doing here is consolidating on the 1 hour time frame. It looks like it's going to go up. 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 Let me speak to the lower time frame to see where this might get us. So on the lower time frame, This is a move. From here up here is a whole part of a move. Down here is another move. So what do we see here? What do we have in the middle here? Up to this point. This one is giving me close to a 50, maybe a zigzag. So if this one, yeah, maybe a zigzag. If it's going to be a zigzag, yeah, it looks like a zigzag. It looks, that correction itself looks like a zigzag in the middle. So where we say this is like a 5-wave, and this is like a 3-wave, and this one might just be a 5-wave. So it is going to be a zigzag. So we should expect an 100 extension. That is what to expect. So that to this place. It's going to be an 100 extension. This might actually get close to 85, and it will extend to 85. So it might extend to 85, but we need to pay attention. Whatever happens here is key. We need to be watching here. What kind of price action are we going to have on the 4-hour? And but so far it looks like it's if this consolidation continues, it's more than enough consolidation now. If the price wants to come down, they'll just give like indication like this and correct to the downside and move up again. So what with this I'm seeing looks more like price is going to break higher. They did something similar in the Euro JPY, and they never, they are very wicked. They are very wicked. So, the price need, have an intention of going down. It should be coming down from here. But this does not look like a price that wants to come down from here. So, I think in between here and here is where we should look for a sell again. So, we should look for a sell again. So, the best thing also to catch a fall from here is to do this. Because that would be the best thing to do, really. If you don't want to miss an entry, because they are doing all sort of rubbish in the middle now. So, best thing to do is to set a trend alert around this area and see if you're going to have a 1-hour candle close below it. So once we see a 1-hour candle completely close below here, it's so much like they're going up, they are going down now. So, but for now, it's still early to say we want to come down. So, because this is like a move, and this is like what is like a retest or a pullback. So, and if price wants to go higher, it shouldn't form 1-hour candle below here. It should go up. So we'll pay attention to between these areas for a sell. And when that happens, you know what to do. When that happens, this is a A, and this would have finished B. Then you look for an extension of 123.6 from between here, down here, come back to the limit. Whatever it gives us below here is an exit point, and before price begins to pull for that up again. So other yen pairs, it will be giving us secrets. They will be letting out secrets out of the bag for us to deal with this one. So that's just all we can see for now. I think I can't do more than this, and I hope that we'll have a very beautiful week.